Good morning, good afternoon, good evening, traders. I hope you're very, very well. And in today's cryptocurrency technical analysis, I'm going to be covering why Bitcoin dumped on the charts. And I'm going to show you why I went short where I did. I'm going to show you why I stayed short. And I'm also going to talk about why I think we could be seeing a little bit of a relief rally. Also going to answer the question, is the dump over? Because there are a couple of scenarios that could play out. So if you like this video idea, please remember to give it a thumbs up, like, follow, subscribe, and share. So I'm going to start in the BYBIT South Africa Telegram group. We were asked this morning, hope everyone made tons on shorts. Shout out to Rajesh. What's up, brother? And I've been in a short since 21,785. And that was a snapshot taken earlier this morning. And I've stayed in the trade. Also drew this little picture that we are at a monthly level. We could be retesting this monthly level as resistance and see a move down, but we could also see a breakout of this level. And if we retest it as support and break this $20,000 area, which is a change in market structure, we could see prices move up a little more. So check out that BYBIT South Africa Telegram group. Some great guys in there, great TA, and a great community. You won't be disappointed. By the way, if you are not registered with an exchange or you're not registered with BYBIT, check my links in the description of my YouTube video. There's a $4,200 bonus depending on what you are depositing. But with that, let's get into the technical analysis. As you can see here, we were trading in a parallel channel, which could actually be seen as a bear flag. Here you can see right there. If we take just a very, very quick measure from the beginning to the move to the end of the move and move that to where price broke down, that generally does give you an indication of where price is going. So round about where price is, if we take it from, actually we should take it from there. So actually we could see levels still lower than that $19,276 area. Doesn't mean that because we've bounced in this area that we are going to hold this area, but I think we could be close to a bounce, and I'll show you the reasons why. But first, let me show you the video I did on the 23rd of August talking about a short idea and take profit close to that monthly level. Let's play that. Quickly jump on to give you a short idea on the Bitcoin chart. As you can see, we've got a head and shoulders pattern that is played out here on the 30-minute. And I actually started out, I saw an inverse head and shoulders starting to play out on Bitcoin as we dumped down from that $22,000 area. And a very quick measure rule is you just take from the bottom of the head to the neckline and measure right there, and you can see we almost hit that target. Right after that, a couple of days afterwards, I actually saw this head and shoulders starting to play out. And there you can see measure from the head to the neckline. If we broke down below this neckline, that is a very, very bearish sign, and we did break down past that neckline. So look at the video that I showed you there just to see that technical analysis. And if you went short there, congratulations. As I said, I am currently still in this trade. I haven't closed out the trade, and I'll tell you why I haven't closed it out. So I actually originally went short around this $21,450 area, as I spoke about in the previous video. I placed my stop at entry because it looked like we were going to break out here, so I didn't lose anything in the trade. And why I thought that we could still go short was for a couple of reasons. The first thing is that the Jerome Powell speech was coming out on Friday the 26th of August, and I knew that there would be volatility. So I stayed out the market up until that point. But leading up to that announcement, I want to show you what CVD was doing. So CVD is cumulative volume delta, and that is delta is basically the difference between the long contracts and the short contracts that are opening, and that gives you what is going on. And generally, retail traders trade at or enter the market with market orders, and that is what CVD shows. All of the market orders. And you can see that CVD was making a higher high, but price was making a lower high. That means that the bigger market players, the whales, were absorbing the longs that were coming in at market and placing limit orders, absorbing the price, pushing it down. And you can see here, price making a lower high, but CVD making a higher high, and that is bearish CVD divergence. And I kept on seeing bearish CVD divergence playing out. A higher high on CVD, lower high on price. Same thing here. All the way to the close of 25th of August. So I was waiting on the 26th of August to see what was happening. I actually missed entering a long here, placed a limit order. Price went up to the top. I thought I'm not going to FOMO in. And this is what I saw play out. I saw, and I actually referred to it in this video. I said we could still take out that top of that head there. So be tight with the stop losses if you were going to take the trade. But my idea was still valid. So we did come and take out that top there at 21,800. And you can see we had a swing failure pattern. Nice move to the downside. And here is where it started getting very, very interesting. So I pulled the fixed range as I saw the swing failure pattern happen here. You can see we took out this previous high here and we came back and closed on the, I think even the 15-minute below that wick, which means that there were market orders, shorts closing out and coming in as longs, foaming in at the top and creating liquidity for the whales to come in and fill their big orders, because they can't just put a limit order in. They've got to wait for where there's areas of liquidity where market orders are going to execute, and that's where it happened. And I saw this price action, saw the bearish CVD, saw on the TPO charts that we were, if you look at the 26th of August, right there, you can see at 26th of August, that's a TPO chart. We were right. We rejected at that value area high. And generally at a value area high, that's where you want to be taking a short. We couldn't really take out the high previously. And that to me was a bearish sign. And you can see I entered 21,785. And I stayed in that short. I was intending to just do a scalp because I really thought that we would go up and down here. But when I saw price break down at this value area low of the range and just go straight through it, I thought this is a good trade to hold on to. Kept on going down. We lost the weekly level, retested it as resistance, came down, made another bearish pennant, and we came down and tested the monthly, which was my original take profit in my previous video, and we are now retesting this as support. So, and the reason why I stayed in the trade, I didn't take any profits, is because all along the way, I kept on seeing that bearish CVD. So we made another lower high, another higher low, lower low, and we had CVD bearish divergence there. Again, this morning I could see possible CVD divergence playing out, so I haven't closed the trade. I've just put 50% of it stops in profit and 50% very close to entry. So I'm looking to see what is going to happen on the CVD. Also very important to note on that very big move down originally is that we had, let me just reset this chart. Apologies for that. So on this very big move down here, first we had an increase in open interest, which means that longs were opening, new contracts were opening with price going up. That looked bullish. Then all of a sudden we had a drop in open interest, which means longs were closing out, shorts were closing out, and price had a rapid drop. And when I saw that open interest was increasing with price decreasing, I knew that we were in for a very, very good move. And here you can see open interest increasing, price decreasing, and the same playing out all along the way. So let's look at why price could possibly reverse here and what the possible scenarios could be. So as I said, the scenario that could be playing out is that this region could be retesting as resistance. And if that is going to retest as resistance, that is a bearish scenario. And if we break this previous low over here and retest that as resistance, we could be in for lower levels. And that's why I'm still staying in my trade. But I'm watching the CVD divergence. I'm watching some of the other indicators. Other scenario that could play out is one that's very, very important. We could see price come straight through this monthly level, retest it as support, go up. And what I would like to see happening is this market structure change here at $20,000. And that for me is a really, really key level. If we do not reclaim this and we stay below that market structure, we are going to see lower. So very, very important to stay cognizant of what is happening there. Let me mark out that key level again. So looking at the CVD right here, and the open interest right now, not too much happening. I suspect at about 2:30 South African time, 3:30 South African time, New York will open. We'll start getting more volume coming in, and we'll see what happens on the chart. The other reason why I think that we could have a bounce here, you can see I've marked this level here in a white line. And if I go back all the way to December and November 2020, we do have an area here where price rejected at there. That's the only kind of level that I can see there. The second reason that I think that we could reverse there is because we've got a larger value area low in that area. Let me just turn off my levels so we can see it more clearly. So as you can see, we dropped down into from that $28,000 area on the 13th of June, and this is the entire range since the 13th of June. And at the moment, we're right at that value area low. So that value area low really has to hold as support. If that does not hold as support and it comes and retests as resistance, we are definitely in for lower prices. Possibly 15,000, 12,000 is a level below that. Let me just turn on those levels. And I've got there, you can see what my levels are. So if that value area low doesn't hold, we break this market structure, lose that weekly level, I will hold on to this trade as long as I can and just chill in it and maybe just take a couple of scalps. But it looks like at the moment that we are holding this value area low and that we could get a bounce up here. So I'm going to look for some strength above the $20,000 area. I've got some stops in profit for my short trade over here. So I really don't have to take a trade. Don't be forced to take a trade here unless you start seeing some strength. But wait for the New York Open. The other reason I think why we could see a bounce here is that we have a CME gap above 19,800. So normally those gaps do come and fill, but the question is it going to fill today, tomorrow, or in a week's time? Are we going to go down further? Because we've also got gaps here at that $27,000, $28,000 area, around about the $34,000 and $36,000 area, and you can see that dates back to May 2022. So it could take some time for those gaps to fill. So whatever you do, be very careful in your trading. Watch what you're doing. Have a look at the USDT dominance. Obviously, if USDT dominance is going up, that means the crypto market is falling. And at the moment, we have a little bit of a rejection on the daily. We've got a trend line here, and if we come and retest this as resistance, see USDT dominance declining, then obviously the opposite is going to happen for crypto, and crypto is going to go up. Also, the other thing to watch is the Bitcoin dominance, and have a look. I think an important date is going to be very close to the ETH merge. That can be very, very bullish if everything goes well. Hopefully everything goes well. If it goes well, we could see some rallies up to these highs, maybe 21,000, possibly to that $25,000 area. Obviously not financial advice. Keep your eye on the charts. Make sure you smash the like button, follow, and subscribe if you're on YouTube so that you can keep up to date with what is going on. Guys, thanks for watching, and I'll see you in the next video.